welcome back to the channel. So we've got another video today on STOCKSFC. Now this is a really important part and a really interesting part about STOCKSFC that I'm going to be going into today. And that is all about the economy on STOCKSFC and looking at the sustainability of the product, things like that, which are really important factors to consider when you are obviously putting money into a platform. If you like this video, smash the like button and subscribe to the channel. If you want to get involved with STOCKSFC, there is a link in the description below if you did want to get involved today and start building your portfolio. So then guys, let's get into the nitty gritty of the economy on STOCKSFC. As I say, this is really important information to consider, guys, if you are thinking of potentially putting some money onto the STOCKSFC platform. So what is the STOCKSFC economy and what affects the economy then? All trades within STOCKSFC happen within the platform, so the platform itself has its own economy. STOCKSFC's goal is to create a healthy and sustainable economy for their users. In general terms, STOCKSFC can say that the economy is healthy when prices are stable or rising. So how do they track the current state of the economy on STOCKSFC then? So STOCKSFC uses a metric called the SF20 to track the current state of the economy. The SF20 works just like an index fund such as the SP500 or the FTSE 100. These indices are the average price of the 500/100 companies. STOCKSFC's SF20 works just the same. Each day the SF20 finds the 20 most valuable player stocks and calculates the average price. STOCKSFC can then monitor the SF20 to track the overall health of the platform and measure it on a chart over time. So let's have a look at the stock values then. So this is of course the player stocks. So stock value is determined by the supply and demand of the stock in the STOCKSFC transfer market. When there is a high demand for a stock, the stock's value is likely to increase. Further, this will increase in stock value is often in line with better in real life performances of the player. So some of the factors that can cause a stock's value to rise then are of course the player's form, player transferring to a club that's going to get more starts, or a player transferring to a club that's maybe a higher calibre than his current club. Factors that can affect the player's stock and cause it to drop then includes the player having poor performances, moving to a club where he's likely to start more games, transferring to a club that's poorer calibre than his current club, or a long-term injury. Let's just have a quick look at scarcity of the stocks on STOCKSFC then. So scarcity is the concept at the core of the platform to increase the stock's intrinsic value over time and make long-term acquisitions more appealing. By limiting the availability of stock, STOCKSFC creates a sense of rarity that can make it more attractive to potential buyers and increase its intrinsic value in the long run. At the end of every IPO window, all unsold stocks are destroyed. This ensures the scarcity of sold stocks on the platform is maintained since the destroyed stocks will never be reminted. So to ensure scarcity long term, STOCKSFC also use a process called share burn. So when a user purchases a stock from another user on STOCKSFC, 1% is deducted from the number of stocks that the buyer will receive. These stocks are permanently destroyed, which means the player's total number of stocks will always decrease over time. This ensures that the possible reward payout per stock always increases over time. For example, if a user buys 100 stocks on the transfer market of Marcus Rashford, the user will receive 99 stocks and 1 stock will be permanently destroyed. The purpose of the share burn is to increase the stock's intrinsic value and make long-term purchasing more appealing to users. As share burn decreases the stock's total supply, the stock's potential rewards increase because the rewards will be split amongst less stocks. So some important market policies on STOCKSFC. So each football player will only ever be sold once by STOCKSFC. A maximum of 100,000 stocks will ever be created for each footballer. All unsold stocks via IPO will be permanently destroyed. STOCKSFC has the following goals to create long-term sustainability within the platform: a reward system that can continue to pay out rewards during market downturns, a platform that is not reliant on new users to continue operations. Sustainability is the core principle of STOCKSFC. Reward payouts are allocated based on the current balances of the reward pots. This ensures that overpayments are not possible. STOCKSFC was also built to be fully operational with any number of users. STOCKSFC can operate a full functionality within 1 million users or 10 users. User numbers and funds do not have direct impact on the platform's functionality. The STOCKSFC reward system can continue to function at optimal performance with scenarios of high activity, low activity, and everything in between. Since STOCKSFC uses Ethereum, which supports 18 decimal points as its native currency, STOCKSFC can continue to pay out rewards for 175 weeks over 3 years with just $100. This is an extreme circumstance that is highly unlikely to happen. However, STOCKSFC have comfort knowing that the platform can withstand market downturns of any severity. Rewards are not solely reliant on user funds either. So as STOCKSFC also uses staking wallet that directs its yields to the rewards wallet, STOCKSFC can still maintain reward payouts without new users or funds entering the platform. As the platform grows, STOCKSFC intend for staking to become the main source of funding for the reward pots. So how have STOCKSFC tested the reward system then? So the reward system has been stress tested across 3 different scenarios. User growth and deposits consistently increase. User growth stops but deposits increase. User growth and deposits constantly decrease. STOCKSFC conducted some stress testing, which was conducted over varying periods from 1 month to 5 years by using the basic percentage reward system with no further improvements. The results of all testing periods provided similar results in all 3 scenarios. The results showed that the reward system naturally adjusted itself to find stability in all scenarios. In each test, funds were added to the rewards pot to simulate trading commission. The rewards pot balance was logged, the payout was made to simulate the rewards payouts, the final balance was logged, and repeated the above for further weeks. So let's have a look at the results for scenario 1 then. User growth and deposits consistently increase. So in scenario 1, as expected, STOCKSFC can see as more money is added to the pots, the payout increases over time. The buffer between the payout value and the balance before payout also increases. As this buffer grows, it provides added protection in future downturns and can slow down the impact of declining market circumstances. In scenario 2, user growth stops, deposits increase. In scenario 2, funds added to the reward pots remains the same. In these circumstances, the rewards would eventually level out and remain the same every week. In scenario 3, user growth and deposits consistently decrease. In scenario 3, we can see that funds added to the reward pots become lower over time, but this doesn't have an instant impact on the payouts. Reward payouts actually rise for 6 weeks before any downturn. If the market becomes stronger during this period, it is unlikely that there will be any noticeable effect on reward payouts. So let's have a look at STOCKSFC cash flow then, and how STOCKSFC make money. So STOCKSFC takes a small commission on all user-to-user trades and IPO sales. These funds stay within the company and are used to grow the platform. When a stock is purchased via IPO, the funds are split between the following wallets automatically using a smart contract, which is obviously available on Ethereum. Reward wallets, the buyback wallet, the staking wallet, and the development wallet. When the stock is purchased via the transfer market, the funds are split between the following wallets automatically using a smart contract. Rewards wallet, staking wallet, and the development wallet. So let's learn a little bit more about staking on STOCKSFC then. So staking is a way of earning rewards for holding certain cryptocurrencies. STOCKSFC uses internal staking to add funds to the reward pots and grow them over time. Staking requires STOCKSFC to lock away a portion of their funds and allows them to generate a monthly yield reward. 10% of funds that arrive in STOCKSFC development and operations wallet are sent to their staking wallet. The amount of funds in the staking wallet will always grow, meaning the funds that STOCKSFC add to the reward pots from the staking yields will be higher each year. This means that in the future it is likely that staking yields will become the main source of funding for the reward pots, and the platform will gradually become less reliant on trading and IPO commission as time commences. STOCKSFC will never take funds out of the staking wallet. This means that the size of the wallet is always growing, meaning that the yield will be higher and the amount that enters the reward wallets from the staking wallet will also increase over time. As the platform grows, staking will provide a permanent and sustainable income source to the rewards wallets, and the amount generated will become higher than the reward funds generated from IPO sales and trading commissions. So let's have a look at these segregated wallets then. So what does this mean exactly? So STOCKSFC uses segregated wallets, which means their funds are split into different wallets depending on the purpose. For instance, STOCKSFC hold all user funds separately than their platform funds and reward wallets. This gives STOCKSFC an extra layer of security and ensures that funds are only used for the specific purpose the wallet was designed for. So what are the segregated wallets that STOCKSFC uses then? So there's the user fund wallets. All user funds are held in a secure and segregated wallet. This wallet has no other purpose than to hold user funds. The only purpose it serves is for deposits and withdrawals. STOCKSFC will not directly access this wallet. The balance of this wallet is always higher than the total amount of user funds on the platform. There's also the rewards wallets. The reward wallets are 4 independent wallets that contain funds used to pay Team of the Week, Team of the Month, Team of the Season and in-play rewards. And then there's the buyback wallet. The buyback wallet is used to create buy orders for the players on the exchange when an IPO has ended. There's also the staking wallet. So the staking wallet generates funds for the reward wallets. And then there's the development and operations wallet, which is the STOCKSFC platform funds taken from trade commission. So can STOCKSFC make money from the segregated wallets? No, they can't. STOCKSFC only use funds from the development and operations wallet. They do not directly access the other wallets, and they are controlled by smart contracts via Ethereum technology. So what security is on the platform then? How do STOCKSFC keep user funds safe? So STOCKSFC uses BitGo to hold user funds within their secure vaults. All funds are stored in a highly secure environment in segregated wallets. This means that STOCKSFC funds are separate from other funds held by BitGo and their other customers. BitGo does not have direct access to our funds or use any funds for other purposes. We also have a $250 million insurance policy against our wallets held inside BitGo vaults. How secure is BitGo then? So BitGo is the established leader in crypto security and blockchain infrastructure. BitGo operates wallets for some of the world's largest exchanges and is heavily audited while pioneering a multi-signature wallet architecture. BitGo is a qualified crypto custodian and holds licenses with regulated authorities, which means that it meets rigorous regulatory standards aiming at protecting client funds from loss or misuse. So finally, let's just have a quick look at the roadmap of STOCKSFC. So April 2023 alpha and beta launch. That's already happened, of course, and the public launch has now also happened as well, which was May 2023. So August 2023 coming up at the time of recording as rewards payouts begin, of course, when the new season starts. 2024 is going to expand the league coverage, so that's going to be probably the other top leagues coming onto the platform for players from leagues from La Liga, the French League 1, German Bundesliga and the Italian Serie A. 2024, they plan on doing a mobile app, which is exciting stuff. And 2025, they're going to go multi-language and do some global marketing as well to make the product worldwide. So that was all the economy and the sustainability of STOCKSFC. This is a really important video and a really important subject to learn about, especially if you are thinking of potentially putting some money into the STOCKSFC platform. None of this content, of course, is financial advice. Always do your own research and never deposit more than you can afford to lose. If you do like this video, smash the like button, subscribe to the channel. If you want to get involved in STOCKSFC, you can sign up using the link in the description. Okay guys, thanks for watching as always. I'll see you again on the next one.